We're going live in three, two, one.
Hello, everyone. Welcome to the iCFO Capital Global Virtual Investment Conference, Scottsdale, Arizona. My name is Jessica Santos, VP of Administration at iCFO Capital Global. It is an honor to be here today with the country's best investors, investment professionals, and top executives who will future game-changing technologies and innovative business models across multiple industries. In addition, we have several exciting companies presenting their opportunities. But before we start, I want to thank our presenting companies for the tremendous effort. Thank you for the opportunity to serve you. I want to thank our investors for all the years of support and for being part of our vision. I thank my team members and our iCFO Capital partners for making this event possible. I want to thank Chris Tetzi, founder and CEO of iCFO Capital Global, Robert Rees, VP of Operations, Johnny Rivera, Account Manager, Carlos Garcia, Account Associate, Mia Tetzi, Administrative Assistant, Edgar Park, Legal Counsel, Gilbert Ochoa, Executive VP, Peter Morgan, Administrative Assistant, Vanessa Nieto, Human Resource. I also want to thank our general partners, starting with Michael Lerma at iCFO Newport Beach, Mary Lou Garcia at iCFO Beverly Hills, iCFO La Jolla with Jack Cohen, iCFO San Diego with Bruce Blackman, and Philip Bradley as Executive VP. Stephen Lee at iCFO Scottsdale, George Mena at iCFO Palm Springs, iCFO Florida with Bob Lucas, iCFO Hollywood with Star Hollis, iCFO New York, Jocelyn Jambao, and iCFO San Francisco with Bernard Picot. So what is next for iCFO Capital? We are pleased to announce that iCFO Capital Global will be launching iCFO Asia, which will include Singapore, Hong Kong, and Jakarta. I want to take the opportunity to talk about iCFO Capital Global. We are an investor relations firm that provides entrepreneurs and early stage companies with critical access to our capital resources by bridging the gap between entrepreneurs with investors. We represent over 4,000 private investors who invest in a wide range of capital sizes. Each month, we host several virtual investment conferences throughout the country. These meetings bring accredited investors, family offices, VCs, PE, fund managers, and investment professionals interested in pre-qualified investment opportunities. iCFO Capital Global provides a complete investor relations service by prospecting the right fit investors and qualifying them so you can close your deal. Thank you for our 5-minute commercial. Please enjoy the conference. At this time, I would like to introduce you to Robert Rees, Vice President of Operations at iCFO Capital Global. Robert has a combination of 20 years in running a sales and marketing business in Latin America, Mr. Reese has worked closely with various industries, including consumer products, health and beauty, regulatory, business development, and market analytics. He has developed and presented plans for product positioning, packaging, and price strategies to produce the highest possible long-term market share. Mr. Reese has attended Universidad Autónoma de Baja California and earned a bachelor's degree in business administration. Ladies and gentlemen, let us welcome Robert Reese.
Thank you, Jessica, for that kind introduction. At this time, I want to welcome the investors and investment professionals, the presenting companies, our iCFO Capital General Partners, and the team behind the scenes for being here today as we look forward to a productive and meaningful conference. Our presenting companies have worked hard to prepare their presentations and are ready to answer questions from all investors participating today. The presenting companies are at the forefront of innovation. Many of these are at various stages of development, such as early stage, startup, growth, and expansion across multiple industries such as manufacturing, healthcare, cybersecurity, fintech, and others. The format of today's virtual conference is as follows. Each presenting company will deliver an 8 to 10-minute presentation. I will provide a 2-minute warning for each presenter. Please visit each presenter's virtual booth for further discussion. The presenter will be able to answer any questions you may have. After the last presentation, you can click on Exhibitors, select the booth, click on Connect, and meet live. For presenters, as you go through the slides, please request to advance to the next slide as needed. The presentations will be done back to back, allowing the investors watching to view all of them in the next 2 hours. If you miss a presentation, there will be a video replay of the event. For those who were not able to view it live, you will have the opportunity to see it here at the auditorium. There will be networking with entrepreneurs and investors using the virtual booths immediately after we finish with all the presentations. For those who have any questions regarding the event or how the virtual booths work, there will be an information booth available where we can assist you at any moment. In addition to the virtual booth, you will be able to join a group networking session at the virtual lounge. Simply click on Lounge in the submenu. Investors, our presenters are looking forward to meeting and speaking with you. And now our legal disclaimer. Please note the iCFO is hosting this conference to enable participants to gain some insights into the businesses of the companies making presentations today. The contents of today's discussions are not intended as an offer of any securities and should not be construed as an investment offering to any participant. All statements made in business presentations today's conference are statements made by each company and do not represent the viewpoints of iCFO. Each company is solely responsible for any statements or representations they make in their presentations. iCFO has not independently conducted any due diligence and does not endorse any investment offer that might be made in separate meetings with any company. Potential investors should engage their own advisors and conduct their own due diligence. At this time, we'd like to introduce the first presenting company, Orion Innovations. So please welcome Mr. Rodney Shute, President and CEO. Rodney is a proven multiple-time president and CEO of publicly traded, privately held, venture capital, and private equity-backed companies. He has led several companies in the healthcare industry, including Hypersound, with directed audio emitter technology, Widex, and Unitron, which both develop hearing solution, and Aspira with clinical software. Orion Innovations Incorporated is a healthcare company led by a proven management team with a track record of growing and scaling businesses, focused on minimizing human clinical errors and creating standards of care via proprietary IP-protected solutions to common healthcare problems. Rodney, the floor is yours, sir.
Thank you, Robert. Good afternoon, everyone. Again, I'm Rodney Shute, President, CEO, board member of Orion Innovations. Orion is a med tech company. I'm about to cross my 37th year in my career, all of it in healthcare. I spent my first 18 years with GE Healthcare, got recruited away to Smith & Nephew Orthopedics, ran 2 global businesses, and then got my first opportunity to be a CEO of a startup. This is actually the 6th company I've ran. 3 of those have exited, 2 through acquisition, 1 through a licensing solution, licensing exit. Hello, I'm Rodney Shutt, President, CEO, and board member of Orion Innovations. Orion is the 6th company that I have led. I'm soon to surpass 37 years in my career, all in healthcare. Of the companies I've led, we've had multiple exits. Mike Carson is our fractional CFO, very similar background. Combined, we have almost 75 years of experience. Mike also has had Fortune 500 experience, small, medium, and startup experience. He also has multiple success exits.
And myself, Krishna, I'm the Chief Commercial Officer here at Orion Innovations, 23 years in healthcare, like my officers, multiple exits across multiple verticals and domains, all focused on standard of care creation. We're going to begin a journey of Orion's portfolio coming up. As is required, please note that this presentation has multiple forward-looking statements. The disclaimer is provided in the presentation. Orion Innovations is a healthcare company, and we focus on smart, simple, disposable, and as you'll soon see, patentable devices where smart meets simple. We are revenue generating and commercially launched in a portfolio across the world. Started in 2018 in St. George, Utah. As you can see, we have a very experienced management team. We focus on areas that matter, where liability and revenue can be either minimized or recaptured. And we are primarily focused in the hospital and dental sectors. Global revenue generating today, over 300,000 booked last year. We'll be looking at a forecast for the next years and a significant opportunity for growth. We're going to look at 2 train tracks here, the acute healthcare vertical and the dental vertical in parallel. I want to pretend that I'm the patient here, hooked up to multiple IV lines in the hospital. But I bet you did not realize that you or your loved one, or myself for that matter, would face these types of problems. Over half of all adverse drug events are from infusion. They're significantly life-threatening, and they grow for every IV line. Settled court case costs are significant in the multi-$100,000 range up to multi-million. Direct costs can be directly mapped by not solving this problem today. And the fact that nurses have quit en masse has only exacerbated the problem. This problem was faced by Dr. Provost. He saw his son, Dusty, unfortunately pass away from leukemia and connected to these lines, facing this error. With over 200 patents to his name, he decided to do something about it and invent MedLight ID. He is the chairman of the board and a significant cap table holder. Second vertical. So the dental market faces this procedure eroding, revenue eroding, and stress creating, where the gag reflex is impacting a significant portion of the population, 8% of the entire population, significant errors, direct loss of revenue to the dentist bottom line, loss of patients, schedule, and unhappy staff. Dr. Olson, a 33-year dentist, figured out how to solve that. We acquired his intellectual property because it met our smart, simple, patented, disposable. And we'll talk about the solution for no gag, for gag reflex in a second. The Orion solutions. So if that's the problem, MedLight is the solution to infusion adverse drug events. We're revenue generating. This is a disposal in hospitals. It takes 10 seconds to apply. We are significantly faster than the status quo, and we create a legally required standard of care. No gag is a consumable, in this case, in the dental market, solving that gag reflex. Revenue generating as a consumable, 10 seconds to eliminate the gag reflex, recapturing that lost revenue patient procedure. And it is a strategic attachment to massive existing markets. Looking at these categories, but not going into the detail, intellectual property, remember, smart, simple, disposable, patented is Orion's portfolio. We have, as you can see, 7 granted utility patents and 3 for MedLight and no gag respectively, a host overseas, multiple provisional, and an incredibly dominant position. We have the lowest regulatory barrier in either of these market spaces, which allows fast time to market and expansion opportunity, significant bodies of evidence looking at speed, error reduction, return on investment. And we are co-built by some of the biggest names, backed by voice of customer, and have incredible adjacent vertical expansion opportunity. Competition to Orion, there is no direct competition, which gives us tremendous opportunity. If we think about over half of errors from infusion being this tracing of lines and the errors that are present, labels and tape haven't solved them. That's why the errors are still here. So significant error rates, incredibly difficult to standardize, and MedLight solves this in 10 seconds. No gag, the gag reflex. So if you want to move up to a higher risk and higher cost, you could look at Valium or full sedation, or use things which work a fraction of a percent of the time, like salt only. Why has the gag reflex not been solved? Well, no gag wasn't available to now. So incredible large markets, very low competition. Speaking of large markets, multi-billion-dollar TAM, SAM, and SOM in both the acute healthcare and dental markets, with a significant upside in adjacent verticals and OUS market opportunity. And kind of capturing different elements of the commercial approach here, we have an established $24.50 price point for the MedLight ID. 3 smart lights clip onto a line and eliminate infusion adverse drug events in 10 seconds. Massive market. This is just the US market. And we have a gross margin north of 50%. But we're fully launched in 4 major world geographies and have already closed US acute, government, and air ambulance services as key opinion leaders, and have peer-reviewed journal evidence ready to shape the standards of the global infusion procedures. On no gag, an $80 price point has been fully established and accepted, a massive market in dental alone in the US, and an 87% gross margin. Fully commercialized in this case through B2B, we have 1,000 sales reps already selling and are 1,100 in only a few short months. An explosively growing product, multiple international markets now launching. We're capturing a ton of milestone information here in a few short executive statements. MedLight and NoGag are creating a sequence of creating a $100 million valuation company. How are we doing that? Well, 1, we're already de-risked and fully revenue producing. 2, our intellectual property portfolio is massive and growing. 3, strategic pillars across the board in terms of commercial execution, return on investment, and adoption have already been proven. And next generation devices and next generation adjacent verticals are up on deck next.
Our 5-year financial projections, these are not numbers that Rod and Chris threw a dart at a dartboard. These numbers are backed by very detailed models with data that has been confirmed both by the acute care hospital market and by the dental office market. The summary here is that these very modest numbers are less than 2% penetration over time of the very large TAM, SAM, and SOM. The ask and the exit. So revenue generating today, disposable, consumable, and acute healthcare, VA, DoD, dental, and OUS penetration. We have only raised $6.4 million to date. Our cap table is very clean. That $6.4 million comes from about 4 investors that have came along the way, both at the founding position and then at the seed round. Today, we're looking for $7 million. We have completely de-risked our model, and now it is time to accelerate revenue production, scale, continue to expand our IP, and launch 2nd and 3rd generation products. From an exit standpoint, we are already in deep discussions on MedLight with Becton Dickinson and ICU Medical, and have preliminary conversations already started with Henry Schein. From a no-gag perspective, we absolutely think Henry Schein is an acquisition target. They are the #1 dental player globally, and also the potential of thinking about an IPO in 3 or 4 years for no-gag as well.
In closing, this organization is, as Rod said, revenue producing, dominant in its IP position, and ready to take a de-risk business into a scalable multi-exit opportunity. MedLight ID, 3 smart lights, 1 infusion line, patient revenue, risk, and a significant legal binding opportunity at hand. No gag, a consumable for the dental market, eliminates the gag reflex. And these products do their solutions in 10 seconds. It is rare in a career that you bring a standard of care of this significance, much less two. And this is only the beginning. We're grateful for your time. Thank you.
Thank you.
Thank you, Chris and Rodney, for that great presentation. I do want to remind everyone that we'll be having a networking session at the end of all the presentations using the virtual booths immediately after we finish with all the presentations, and also that we have available an information booth where you can we can assist you with any questions at any moment. So now let's move on to the next presenting company, Polyan Technology. With Mr. Boris Maslov, the chairman of Polyan Technology. And over the last 30 years, Dr. Maslov accumulated extensive experience building, developing, and managing companies in cutting-edge industries such as financial, high-tech, biotech, chemical and nanotechnology, and advanced manufacturing. He founded or co-founded several companies and served in various executive positions as chairman, board member, and general manager. Various exits, including sales of assets, M&A, and public exits. Dr. Maslov is currently serving as a board member for several private companies. Polyan Technology is a fabulous semiconductor company developing hardware-based AI solutions for various sensors, such as microphones, smartwatches, cameras, earphones, and industrial IoT. They are a team of 40-plus engineers led by serial high-tech entrepreneurs and seasoned board of directors. They operate out of UK, United States, and Israel offices. They're looking for a round A investment of $12 million. Boris, the floor is yours, sir. Boris, the floor is yours, sir.
Well, thank you very much for the introduction and greetings to everyone. Good afternoon, good evening, depending on the time zone. Can you all hear me?
Yes, we can.
Okay, good. So that company, Polyan Technology, is dealing in the area of artificial intelligence and hardware solutions for that. Next slide, please. At a glance, we are fabless semiconductor, and the term means that we are manufacturing chips, semiconductor chips. Not ourselves, we go to fabricators, to big names, as most companies do. Good example is Apple, also fabless semiconductor company, or NVIDIA for that matter. As Robert presented, we are about 40-plus people, with a fair split between engineers, really solid engineering talent, and really solid management talent. As a group of promoters, we've been promoting businesses like that on a continuous basis over the last 15, 20 years. We incubate one at a time. This is our current one. We've done it before, we will do this one too. Today, we are funded by angels and partly venture capital. We have 3 venture capital on cap table with about 3 million from venture capital and about 9 million total from angels, friends and family, and ourselves. So we're done with our seed round, capital stock. We're currently raising round A. What we do, as we do chips, and those are very inexpensive chips, semiconductor chips, we target markets with large audience, billion-plus devices always, today's markets, today's available markets. So we go after wearables, watches, earbuds, cell phones, hearing aids, and we're going after industrial IoT, which includes particularly smart tires. Our initial products are in the areas of extraction of the voice, clearing of the voice, in health monitoring, in vibration and tires, interesting application, and in positioning of the eyes of the humans for augmented reality. Next slide, please. So what seems to be the problem? The problem is that as computers get smarter, they use more and more sensors, microphones, cameras, vibration, accelerometers, and on and on. Your Apple Watch has about 70 sensors. Your car has about 3,000 sensors. If you count all around, there will be 45 trillion sensors. That's 6,000 sensors per living human being. And processing the data initially of the sensor is the biggest problem. So next slide, please. What we do artificial intelligence, right, at the sensor. So instead of running signal from the sensor to the cloud, to Amazon, services. We just do it on the chip, right at the sensor. And we achieve that at thousands times less power, thousands times faster, and tens times and hundreds times cheaper. Next slide, please. So three major verticals. We develop sensors for IoT, Internet of Things. And the first application that we have here is monitoring of vibration in the automotive tires. We do, and available market right now is about 4 billion units. We do, in the middle column, processing of voice for hearing aids, for cell phones, for any voice communication. We remove all noise. We basically go the other way around. We extract voice, remove noise. And we do monitoring of human health, also north of 1 billion units by 2027. Next slide. Specifically in vibration. Tire and pressure monitoring is mandatory. For example, in the United States, vibration becomes unavoidable, especially with autonomous driving, self-driving. Current solutions do not provide ability to monitor vibrations. We can. So we have a contract with Goodyear right now. It's about 300 million tires a year. Not all of them, obviously, to be subject to our technology, but it's a good start. Next slide, please. We do work with hearing aids right now and extending that into voice communication markets. And you see on the bottom right the names that we're working with. To give you an example, we use microwatts. We can go into the earbud. The nearest competitor takes the entire MacBook Pro power to simulate what we do. So instead of MacBook Pro in your ear, we have 1x1 millimeter chip in your ear. And obviously that's why we have such attraction. Next slide. Health monitoring. The health monitoring problem is that those wearables need to be recharged every night. So you cannot do 24/7 monitoring. In case of seniors, they forget to charge. What we do is always on energy harvesting. You put that bracelet on, you never take it off. It monitors your health comprehensively all around with all the sensors, comprehensive picture of your health monitoring. That's the ultimate solution. So we have extremely strong traction here. Next slide. Speaking of markets, total available market, sizes of the markets, I was giving you numbers of the devices or units. Those are in billions in all of three applicable markets where we have products. In dollars, total addressable market right now is 900 billion. Good number, but as we go to serviceable obtainable market is about 1 billion today. So for us, it is unlimited capability to sell, and it is capability of manufacture. That's what holds us. Next slide. The way we do our chips is different from the industry. What industry typically does, they make the chip and then they try to sell it. Come around and say, would you buy my chip? I'll help you to run it. We do the other way around. We come to the customer, for example, to Goodyear, say, what's your problem? They say, oh, we need vibration in the tires. We develop system for that before we build the chip. And when Goodyear is happy with the system, they say, go ahead. At that point in time, we make the chip, which is specific for the purpose. So we're application specific and we are front loaded very little compared to classic chip design. So we are CapEx light, we're OpEx light. Next slide. In terms of competition, we compete with two different categories. Larger left upper, those are big guys, ARM from UK, various RISC and various central processing units. And at the bottom, there are dedicated companies who are trying to solve the same problem. We are in the upper right, where we should be, beating all competition. And there's more details, obviously, on the slide. I'll skip those. Next slide. In terms of the team, we're quite well presented in Israel. About half of our people are Israelis, and the United States. So it's a good fair mix, 6 and 1 on the executive team. Most of the guys are serial entrepreneurs, with the exception of upper left, who is a longtime executive in semiconductor, Tower Semi, And bottom right is academia, Stanford University, very well known and regarded expert in the area. Next slide. On the roadmap, semiconductor industry has inertia, so revenues are lasting long, but development cycle is long. So in 24, we start our first volume production. In 25, as we start selling to Goodyear and Oppo, we go break through 10 million nice and easy. And round A brings us, around A, round B, about 37 million, brings us to profitability and positive cash flow by the beginning of 25. Next slide.
A little under 2 minutes, Boris.
Yep. That's our financial projections, basically projecting solid gross margin north of 60% and positive EBITDA starting in 26. Next slide. That's our cash projections. We need about 12 million to go through the end of 24, another 25 to go through end of 25, and then we become cash positive. Next slide. Our ask is 12 million of round A, preferred class A stock on 75 million pre-money. And at the end of the round A, we will have chips in 3 major markets selling, 10 million in sale contracts, and about 50 patents. We will be NASDAQ IPO ready. It's not necessarily the exit, but it is a potential to which we are getting ready for, the entire board and the entire team. That concludes the presentation. The last slide, please. 2 contacts, myself and our CEO, would be best. Thank you so much for your attention and for your time. Thank you.
And let's continue with the next presenting company, which is Digital Asset Management. Let's welcome Juan Lorenzana, the president. And Juan started his first company, a web hosting company, in 1997 as a student with 2 of his college professors. Upon graduating with a degree in computer science with an emphasis in software engineering from Brigham Young University, Lorenzana went to work for Lucent Technologies, where within 2 years he transitioned into management and 3 years later became general manager for Lucent's client care solution. Lorenzana has had several IT businesses and participated in several startup ventures of varying capacities since leaving Lucent in 2005. Both on and offshore, in 2014, he joined Atlas 44, a fintech company offering secured loans in the construction industry. And after serving as their CIO for 1 year, he became the COO. Lorenzana has been involved in cryptocurrency markets since 2017 and has served as a consultant to various fintech and cryptocurrency companies. Digital Asset Management is building the next generation payment network that is focused on seamlessly supporting cryptocurrencies and government-issued CBDCs by launching a revolutionary crypto exchange. They will build out a network of worldwide exchanges that will provide the engine to offer payment services in both traditional and next generation forms of currency. The floor is yours, Juan.
Thank you for that introduction. I want to thank iCFO for putting on this event, and I want to thank the investors that have taken time from your busy schedules. From a presenter's perspective, we understand that you've taken time to be here with us and are excited that we have an opportunity to share a little bit about what we're working on. I'm going to go ahead and dive into the presentation. I'll be talking about what is digital asset management. I'll have a brief review of digital asset markets. I'll focus mostly on cryptocurrency, but there's other markets that we're involved in, and we'll talk a little bit about the payment market. I'll discuss what makes us unique, and last but not least, how we can use your help moving forward. So let's dive into the presentation. Digital asset management is a cross-border payment, wallet, and custodial solution. The way I like to describe this is that we are building a custodial solution that allows us to have assets in there that include fiat, cryptocurrency, CBDCs, and other assets, gold, digitized, tokenized offerings. Our wallet is a complement to that, in that the wallet allows customers to manage the assets that are in the custodial solution. So that lets them buy, sell, trade those assets. And last but not least, we have a payment component of this so that our customers can then use the wallet and say, hey, I'd like to make a purchase at a store, and I'm going to allocate, for example, I want my Bitcoin wallet to be debited every time I make a purchase with my mobile wallet application. And we do the conversion on the back end. So we convert automatically from crypto to fiat. We pay the merchant in fiat. But then the customer really gets to pick which of his assets he gets to use for making purchases. So in general, digital asset management is building the next generation wallet system for customers to invest and make payments with fiat, cryptocurrency, future CBDCs, and other assets. And our target market is actually consumers that are looking for both traditional and next generation forms of currencies in both B2B and the B2C markets. So our offering is really a exchange that allows you to hold assets, and then a network that allows you to use those assets when you purchase goods and services. From a digital currency landscape, we're seeing a big adoption in digital currencies and in digital tokens, a digitized marketplace in both countries, banks, and within companies. And even though there's a lot of negative news in the United States about, for example, the SEC going after Coinbase and Binance and others, one of the things that's not discussed is the fact that the large organizations that are already regulatory compliant, like banks, JP Morgan Chase, Fidelity, US Bank, USAA, they already have these offerings, but they're moving forward because they're already regulatory compliant. So the SEC and all the attention has really been around those entities that have not followed or met the compliance needs that already exist in, for example, banking. But one of the things that has happened is that it's created an environment where, particularly in the EU and the UK, they have come out with a crypto-friendly framework, enticing companies to set up and operate out of those jurisdictions. This slide is really a discussion about one particular digital asset. In this case, it's Bitcoin. I want you to pay close attention to different aspects of this. And I invite anybody that's interested in looking at digital assets to start here. Bitcoin is a digital currency, but it has its own trends. And we believe that mathematics and models and trends are important to understand. And so in this chart, what you'll find is that it presents the high price of Bitcoin and the low price of Bitcoin in that year. Pay particular attention to 2017, 2020, 2021, because those were really great years. But as you study this, you're going to see that, one, this particular asset is very volatile, and two, that this particular asset has a 3-year life cycle. So you'll see that the high and the lows move around, but it's about every 3 years where you see a big change in this. And what this means is that with 2021 really being a good year, 2022 and 2023 are kind of the recovery years, and we anticipate there's an upswing coming here in the future. From a digital asset management perspective, this slide shows how the VC market has responded to this particular life cycle. And so you'll notice that investments quarter over quarter through 2016 and 17 held flat. 17 was a great year at the end, so VCs came in strong. And then they kind of held through 18, 19, and 20, 2020 being a really good year, and hence you saw increased investment, 21 being a better year. And then through the rest of 2022 and 23, it's kind of come down. So we anticipate that solutions that are in the digital asset marketplace have a really good opportunity coming here for some additional investments into types of technologies like ours. For market opportunity, digital assets in the crypto space, the revenues worldwide were about 37 billion. And in the payment markets, they were 9.46 trillion. Our market acquisition goal is to obtain 10% of the market in the jurisdictions we go into on the crypto and digital side of things, and 5% in the payment side. And so this solution really has 3 phases of the way we approach the market. First phase is to launch our digital asset marketplace. We're calling this the DAM Exchange. The second phase is to launch our payment network. We're calling this Click and Pay. And the third phase, which is what we're trying to get to, is a exchange. We call it Exchange 2.0. So it's an exchange that holds all different types of assets. What we're really doing here is we're combining traditional exchange and banking functions into one solution, offering a platform so that customers can use those assets when making purchases. And so if a customer chooses to use his wallet system and designates, for example, digitized gold as the account that he wants to pay for, when he uses his payment instrument, whether it's a credit card or a mobile wallet, we will do the conversion on the back end, and then the customer the merchant receives his funds in fiat. And this really simplifies a lot of the struggles that we're seeing in the payment market, as well as the digitized token markets. What makes us unique is that on the digital asset management side, we are not only going to start by offering 10 cryptocurrencies, but we're also going to offer baskets. It's very similar to what mutual funds did to the stock market. It reduces the risk, provides diversification, and helps us optimize for returns for people who are interested in this market. But these models and these funds have all been put together with the efficient frontier calculations, which are used by hedge fund managers and others to manage assets like these. And the other thing that makes this unique is that we have a coin offering called the Digital Asset Management Coin as part of the management of the exchange. Evolving into the next generation platform, we are going to be offering a mobile wallet and credit card application. And as I've discussed before, it allows us to pick assets from the back end of the custodial solution and use that for payments. Because most merchants do use and process credit cards know that the bulk of the fees go to Amex, MasterCard, and Visa. Our solution runs on our own rails, and that's going to give us an opportunity to do two things. One, engage with the different ISOs and merchant providers and offer them a bigger return on being part of our network. But we also anticipate that that's also going to provide additional revenues to our side of the house. And what makes the whole total solution unique is the fact that we're really creating a seamless all-in-one exchange for all different types of digital assets, fiats, CBDCs. We did design this to be regulatory compliant from the ground up, and that's important, as various companies that have played in the crypto space have gotten themselves in trouble, particularly because they used exchange models or banking models to run their operations. And you really have to build the models around the assets. And so if we're talking about cryptocurrencies, you cannot use the standard reserves used in banking and trading platforms. You have to manage this more toward the asset and the way it behaves. And that's a key feature of our solution. And as I mentioned before, being able to run on our own payment network rails really expands this into having this exchange that holds different assets and then being able to buy the different goods and services that you want to using the assets that you own. As of May 2023, we had 2 months left of development. We're still on track, and we anticipate by third quarter of 2023, we'll be able to launch. We have started the processes of the company formations and the MiCA licensure applications in the EU and in UK. We are looking to expand in Latin America second. And then from a payment network, we anticipate that this will come within 1 year of the launch of the marketplace. We have a great partner that we've engaged here and vetted the solution and are excited to really get to that portion of the plan. What we're looking for here today is we're looking to raise $2 million in seed capital. We anticipate there'll be a round A and a round B, respectively, of 20 million and 50 million. Obviously, if there's an investor that can help us get there faster, we're definitely open to that. But we believe that with the technology that we have and what we're putting together, we're a really good target to be acquired by a large institution or take the company public in 3 to 5 years. From a capital requirement perspective, on our $2 million ask, we are looking at a convertible note, 20% discount rate, 8% return per year. And we also are offering, if investors are interested, the DAM coins, which is 2 coins for every $1 invested. There is a 1-year distribution on that, but the ROI on that becomes 35% on the convertible note or 300% on the DAM coins. And we understand that investors might want to participate in one, the other, or both, and we're definitely open to that. The management team here is very well put together. You have myself. I've been involved in technology early on and in various fintech platforms. Roland had a technology company who sold in 2000 and later has participated in several fintech solutions. James is key to this because he not only had a fintech company that he recently sold, but he used to manage $7 billion in assets for the Arizona Pension and Fireman Fund here in Arizona. And so combined with the team and the technology, we feel that we have a really good solution for an investor to look at and consider us as a part of their portfolio. I want to thank everybody for taking the time to listen to this presentation. I am going to encourage you to join us if you're interested. Join us in our meeting room afterwards. And let's go over what things you can find in certain different the digital assets. There are different models and different things that stand out, but we believe we have a really good handle on that. And that we have a great solution for an investor. Appreciate the time and look forward to seeing you later in the breakout room.
Now let's move on to the next presenting company, Cultivate. I want to invite and welcome Mr. Dan Schweiger, the CEO of the company. Dan is an experienced entrepreneur, business executive, visionary, and inventor. And prior to starting Cultivate, Dan was the founder and president of Mentor Capitalists Incorporated, which provided a full range of resources and development strategies needed to increase revenues at startup and turnaround companies. Cultivate empowers the regenerative economy by unlocking the natural resources within the dandelion as a sustainable source of high-performance materials from bio-based feedstocks, Cotra. Cultivate has built a sustainable and scalable North America supply chain to distribute natural rubber, resin, inulin, and fiber around the world. Dan, the floor is yours, sir.
Thank you, Robert. Thank you, everybody, for having us here. Over the next 8 minutes and 34 seconds, we're going to talk a little bit about natural rubber and synthetic rubber and their difficulties and some of the solutions and some of the problems and solutions. So advance a slide, please. As I got into this business, I got into it because we're solely dependent on a foreign import for a very critical material that's very dear to all of our hearts throughout this whole world, comes from Southeast Asia. I don't want anybody to think that we're anti-Asian, because we're not. We're really pro-American manufacturing, as well as having a supply source here at our fingertips. So there's some problems, there's some solutions. I do believe we are the solution. We're curing a lot of the problems as we go along, but we have 8 years of cutting edge development work. And I've actually been in this alternative rubber space since 1995. Go ahead, advance, please. So, the big snapshot here is, and we'll talk a little bit about, carbon footprint, but if you think about that big tanker coming across the ocean, it takes 30 to 40 days for that big tanker to get here from Thailand or from Indonesia or Malaysia, wherever it's coming from. And that tanker actually will burn about 63 million gallons, 63,000 gallons every 24 hours. So it gets into the millions before it ever gets here. So carbon footprint is very easy for us to sell against. But the biggest thing that we can sell against is we are solely dependent 100% on an import. And we know since COVID what being solely dependent on a foreign imported product can do to us. So it's strategic material. It's on the critical supply list. Our government actually warehouses and holds on to a certain amount of this precious material, just like they do with some of the other cobalt and other products. Advance, please. So the big picture here really is, we're customer centric. We went down into the market, asked tire manufacturers, asked non-tire manufacturers, which are footwear companies, apparel companies, yoga mats, wetsuits, basketballs, footballs, you name it. And there's a lot of lifestyle brands that are out there. But really what they're looking for is that they're held accountable and they need a product that's going to help them meet their ESGs as well as their LCAs with little to zero negative environmental impact. So as we've started over the last 8 years, our focus has switched and changed, going and gravitating more to saving the environment, carbon footprint, sustainability. Even though we had all of that, we just didn't tout it. Now we are. We're bringing our best foot forward here, and we actually have a material that's actually better than any synthetic and better than any natural rubber that's on the market today. Advance, please. So if you stop and think about synthetic rubber, it's not sustainable. It's pretty dirty. It's pretty dirty business. About 14 million metric tons. There's 300 million tires every year sold and thrown into the landfill. We hear about the petroleum and fossil fuel that's been dumped in the oceans. We're really about displacing fossil fuel and plastic. Next, please. So you may say, well, yeah, but Dan, you said there was a natural rubber that comes from Southeast Asia. Yeah, it has its problems too. It's not very friendly to the workers, and it's controlled by a cartel, and we are dependent on it. And there is a lot of deforestation going on, and our rainforest is being destroyed due to the fact that, you know, when these trees are being harvested, it only has a certain amount of years, and then they have to get rid of them, and they're not replenishing them. Advance, please. So the solution really is having a local source, having a better source, a secure, sustainable, and high quality product. And we actually produce 4 products from the Scottsdale line: rubber, resin, inulin, and fiber. Next. And you get into carbon sequestering here, we actually are good for the soil health. We sequester carbon for 8 to 12 months because that's the life cycle of our planting season, depending on the area. And we sequester carbon, and there is a lot of soil health and beneficials that the dandelion does. It goes down a little deeper. Its roots go down deeper than most plants. It aerates. It brings nutrients down there. It brings carbon down there. It lets the microbes kind of work, and lets the bugs and the worms kind of work and do their thing. Next. So the market that we're really going after right now, because we don't want to go into the commodity market, we're really going into the specialty market. And that specialty market is growing as we speak. And we're starting to see manufacturing come back to the United States. So therefore, it's starting to grow here even more so. Next, please. So that marketplace that we're looking at, it really is the footwear, it's industrial products, it's actually apparel, and we can get into the automotive and transportation, but that's not one that we're going after right now. The ones that we're going after, the ones that's really looking for ESGs and LCAs, and that life cycle analysis is really, really important. And they'll actually pay the high premium price to have something green friendly and that's saving the environment, like the Patagonias of the world and the Vans of the world and certain corporations like that. Next, please. So our model really is we're fully integrated. All of these are contract. We don't have any steel on the ground right now, but we do have 40 patents, and it's wrapped around from everything from the genetics and the seed and the varieties right up to the planting and the processing. And most companies don't do just one bit, or most companies just do one bit or piece. They don't do all of this like we're doing, but we have to prove it and show that it can be done. Next. So you say, well, how do you fare with you know the other naturals that's out there? There's Waiuli that's out there, but it needs the desert. Havea needs tropical. We can grow in 48 states in the United States and throughout the world. And we're really automated in the Waiuli semi-automated. And as that Havea tree, every bit of rubber we get today, it's all manual. Next, please. We have actually met a lot of milestones with on shoestring budgets. As you can see, I won't belabor it too much, but every bit and piece of our company and every process we've advanced. Next. Some name brand companies that have come along with us. The beauty of this is at 3,000 acres, we're at a break-even point. We are revenue positive, but we're not break-even positive. However, with these 4 customers could take everything that we can produce for the next 10 years. Advance. We can't do it alone. I mean, here's some of the name brand companies that we've been working closely with, from plant science to agronomy to processing to our partners that have trial and tested and have proven that this material will work. It does work. It works well. And our commercialization partners down here, some of the big name brands that we've all known, and then of course our funding and partners there. Next, please. Talked about the patents. We got 40 patents internationally. Continue, please. Let's go ahead and get through this because I'm down to 45 seconds. Let's get to the ask, so that for those that are interested. So I think it's the next next. Okay, so as you can see, we've done quite a bit on a shoestring budget, but we are in a $10 million raise right now, and use of funds is going to be to continue with certain R&D, but also to improve our outsourced facilities. So there's a little bit of CapEx there. We plant our crop, we harvest it, we process it, and then again, we need some working capital and some other expenses. We expect to go through another round of funding, probably going to be at about a $7 to $8 million round. The next round, that actually can be done internally, part equity, part debt. Next, please. Well-oiled machine here with great management team that has done this before, and we've all worked together doing this before. So if anybody wants to continue to discuss anything about our business, please join us in the room at the end of this presentation, please.
Dan, thank you very much for your presentation. We do have a couple of some minutes left. If you want to add something additional to your presentation. If not, we can move on. Is there anything that you want to close with?
Sure. Let's go back to that regenerative agriculture, since we didn't get to it. And that's very important today, right here. We're not perfect, and nobody's perfect in this world when it comes to sustainability and when it comes to regenerative agriculture. And the definitions are still out there, but we are really making inroads every step of the way, from the soil health right on up to the crop diversity. We work as a rotation crop, so that's to minimize the risk of disease and parasites, as well as our growers that we work really closely with have livestock that they kind of run on their farms as well. So it's one of those things that we're constantly striving towards hitting all 6 of these principles, but right now we're probably hitting 4 and striving towards number 5. But soil health is very important. Water conservation is very important. Biodiversity, and of course this carbon sequestering that I talked about early on. So this is very important, and we've kind of done this from day one. And there's tracing and trackability with this, and it just really gets up to about 4 notches above anybody else that's doing anything close to this in the rubber, resin, inulin, and fiber business.
Dan, thank you very much for this much needed technology. Definitely looking forward to it. And I do have some information before we move on to the next presenting company. The conference is scheduled to end approximately at 4 o'clock, and there will be networking with entrepreneurs and investors using the virtual booths immediately after we finish with all the presentations. And for those who have any questions, we do have an information booth available where we can assist you at any moment. And additional to the virtual booth, we do have a virtual lounge that you have access to by simply clicking on lounge in the submenu. Our next presenting company, Welton Pharma. Welton Pharma was founded to develop pharmaceutical drug products. The company has in-licensed Lubrisol's apostolic technology, invented by Welton co-founders, to solubilize drugs that are not otherwise soluble in water. Welton will utilize this technology to provide novel, patent-protected formulations that offer meaningful improvements to marketed drug products. Their lead product is anticipated to increase the response in cancer patients by 300% when compared to the current standard of care. Please welcome Kevin Sill, founder and CEO of Welton Pharma. Kevin is a biotech expert who develops drug delivery technology and guides products from concept to the clinic. Dr. Sill has spent 20 years as a research scientist, inventor, and entrepreneur in various early-stage biotech companies. Please welcome Kevin Sill.
Good afternoon, everyone, and thank you for taking the time to attend this presentation. My name is Kevin Sill, and I am the CEO and co-founder of Welton Pharma. Before we get started today, I'd like to, again, just point out that this presentation contains forward-looking statements. So Welton Pharma was really founded around a specific technology, and that technology is called Aposolex. This technology is quite simple. It is used in order to make drugs that are not soluble in water, soluble in water. And that, of course, is very important when we're trying to administer these compounds and these water-insoluble drugs in order to patients. And this technology, known as an excipient, is used in order to actually increase the water solubility of certain compounds by up to 50,000 times over their solubility without an excipient. So this is very important in how we formulate these drugs and make them able to be administered to patients. And Welton has partnered with Lubrizol Life Science, who owns the Aposolex technology, and we have now licensed and partnered with Lubrizol, a Berkshire Hathaway company, in order to utilize this technology to advance certain drug products forward. And the first drug product is SN38, and it's used to treat colorectal cancers and associated gastrointestinal cancers. And I'll tell you a little bit more about that in the future slides. In addition, I just want to point out that Aposolex, this technology, won the Medicine Maker Innovation Award in science in last year in 2022. So our lead drug product, it's Aposolex SN38. And this drug product is based upon a derivative of irinotecan called SN38. Now, irinotecan is an anti-cancer drug. It's a chemotherapy drug that has been approved since 1996 in order to treat colorectal cancer. So it's been widely studied and widely used. And it is currently standard of care or part of standard of care for treating colorectal cancer. The issue with irinotecan is that on average, only 3 to 5% of the irinotecan is actually converted into the active anti-cancer drug SN38. And that varies patient to patient in an unpredictable manner. Some patients are going to get more, some patients are going to get less. And we'll talk about the impact of that on the next slide. But this unpredictable metabolism, or how it degrades into SN38, is really problematic when it comes to patient outcomes. So what we have done is utilize the Aposolex technology in order to formulate SN38 directly. SN38 is really water insoluble, and it's very challenging to administer this drug to patients in the past. But we're able to formulate this with Aposolex and directly administer the drug such that all the drug already is SN38, and it's not needed to be converted into SN38 in the body. And this is very important for very predictable safety and very predictable toxicity and efficacy. Now, the important thing is we want to be able to dose SN38 optimally. And the challenge with irinotecan is that, as I mentioned, it metabolizes or degrades into SN38 in an unpredictable manner in various patients. And what you see here is in the red line, this is a representation of 223 cancer patients given the same dose of irinotecan and all the different doses of SN38 that are actually present within the body. Now, the red line is the patients that convert a lot of SN38, which is great because there's a lot of anti-cancer activity. However, these patients have really bad side effects, and they're typically unable to continue treatment due to the severity of the side effects. The inverse of this is a patient that might be on the white line. And that white line is a patient that may not have any side effects whatsoever, but they don't have enough anti-cancer drug in order to actually treat the cancer that which is the most important thing. So you have patients that have no effective therapy that they're receiving, which is non-responsive. The goal would be to have something like the yellow line where you have a balance of the toxicity and efficacy. You want to have the side effects such that they're tolerable, but you also have this a very significant anti-cancer impact. And that's what we're doing with Aposolex SN38. Because we're developing or delivering the active drug itself, we have very predictable toxicity, very predictable efficacy, and can dial in the optimal dose of SN38 for that patient. And based upon our research and what's published in the literature, we anticipate the response rate going from about 25% to 65%. So a 300% increase over irinotecan, which is, again, the current standard of care for colorectal patients. And looking at Welton and how we plan to achieve these goals, we were founded in late 2022 and funded with a pre-seed round from friends and family. We're currently raising our seed round, and I'll talk a little bit more about that in the future slides. We plan to advance our lead drug product, Aposlux SN38, with the goal of next year meeting with FDA to allow and get their approval to dose this into humans. And starting the clinical trial in 2025, as I'm sure you're aware, we need to go through and test this out in humans in order to demonstrate to FDA that it's safe and effective before we can sell this drug. In addition, we're still going to be looking at our second and third drug products. We're in the final stages of selecting those drugs right now, and we'll be advancing those as our second and third pipeline drugs going forward. The value proposition for Welton is that we are currently offering a seed round where the seed investors will own roughly 35% of Welton. This is roughly a $4 million pre-money valuation. And we are raising $2.5 million, 1 million units at $2.50 per unit. The use of the proceeds will be the advancement of the Aposlux SN38 to FDA such that we can begin the clinical trials. We will need additional funding in order to run those clinical trials in terms of Series A. And we will also be looking at advancing our other drug products, the second and third drug products that we are in the process of finalizing their identification. Our anticipated exit is in 2025 or 2026, and that really depends upon when we are able to begin the clinical trial and the partnering activities that are going on within the market at that time. Looking at potential returns on investment here, this is based upon our current revenue models for Aposlux SN38, as well as applying comparable deals within the industry and industry standards. With a $100,000 investment, we're looking at a return over the life of the deal of approximately $3.5 to $4 million. And that's a 20 to 50x return on investment per drug product. This is our revenue model for the Aposlux SN38 drug product. And again, looking at developing a second or third drug product as well. Our leadership team I believe we've assembled a fantastic team here. Again, I'm Kevin Sill, the founder and the CEO. My partner, Brad Sullivan, the other co-founder, he and I have been working together in the drug development space for about a decade. I've been in this area for about 20 years. We were able to bring on Art Tipton as our executive chairman. Art is extraordinarily well known in the industry. He was the former president of the Controlled Release Society, which is basically the drug delivery technology society here in the United States. He's taken a company public. He's also had multiple exits of his companies as a serial entrepreneur, including one to Evonik, which is a large excipient manufacturer based in Germany. Supporting the management team is also Rob Lee. Rob is important because he is the president of CDMO of Lubrizol Life Sciences Division, again, strengthening that relationship between Lubrizol and Welton. And David Lin is a former FDA reviewer and is going to be providing additional regulatory advice and helping us interact with the agency, with FDA. Finally, Will Sprague is our CFO. He's formerly the controller for the Tampa Bay Buccaneers, as well as a CFO for publicly traded companies, and has a tremendous amount of experience in this area. So I'd like to thank you again for your time today and paying attention to this presentation. I will be at the virtual booth in order to answer any questions, and you can also contact me at the information there. Thank you very much for your time.
Hello, good morning, good afternoon, or good evening, wherever you are. Welcome. My name is Michael Wang, and I'm an angel investor for the past 20 years. And today I'd like to share with you what angel investors look for in a startup. I'm a typical angel investor. I invested in several startups from AI, biotech, to systems, embedded system space, NLP, etc. And here are some of the things we look for in the startup that make it enticing for angel investors to invest in. The first thing I want to mention is that a startup is a monumentous venture, like anything else. And in any venture, you start small. I begin by saying from a famous Chinese proverb, quoting a famous Chinese proverb, a journey of 10,000 miles begin with a single step. And with that, I want to share with you some of my thoughts and perspective on what makes a startup enticing to investor. Top 5 things to look for. The first thing I want to mention is a scalable business model. This is very obvious. We want the startup to have a hockey stick growth, starting initially, but at some point, at this point inflection, it'll go up, right? So that potential, we understand that startups pre-revenue, and but it has to have a potential to reach some kind of market size analysis, some kind of potential that the startup eventually by a new point of inflection. This is very self-evident by itself, because we don't want it to be a pump and pop kind of business. We want it to grow, reach this point of inflection at several stages, and to bring a meaningful return to the investors. So I say that one of the top 5 critical top 5 or 4 is scalable business model. A business model that will have high justifiable margin, get proven to sustain itself and grow at various stages, and to achieve point inflection in a hockey stick growth model. The second thing we look for is probably the founder's track record, right? Has the founder or have the founders been successful exit in the past? Are they serial entrepreneurs? Are they? What have they come up? Have they raised funds from a VC before? And if they have, it's a good indicator that they have been vetted by the system, right? The VC have vetted them. They have raised funds before, they have exited before, they have, So founders typically learn from the mistakes. Human nature, right? We learn from your mistakes and you learn from your successes. So if you have a successful track record, the chances are your next venture will be successful. So we look for things that what's the track record of the founder? Have they done it right before, the first time, second time, third time? And this will give the investor more confidence to invest in the company. So the third thing probably we look for in a startup is barriers to entry. Barriers to entry, there can be any kinds of barriers, right? But one of the startup, right, is legal barrier to entry, right? Is the IP protection. Has the startup file a provisional patent? And to start with, provisional patent is good, but non-provisional PCT patent, issued patent are even better, right? We know at least that if they file patents, is the legal USPTO office has vetted the invention, right? So there's some kind of barrier right there that forbids people from copycat, and what is the strength of the patent. So legal barriers to entry is one. Obviously, we are here to help with financial barrier. As an angel investor, we try to raise capital. So there are all kinds of barriers to entry that we startups. What are the barriers to entry the startup has formed? And this is one way one of the things we look for. The fourth thing we look for probably is capital management. efficiency. By this we mean with the fund they have raised so far from whatever level they have, the startup founders have raised, what have they done with it? Have they come up with an MVP, minimum viable product? What have they done with the funds they've raised so far, and what they want to use the intended fund for, right? And what is the next inflection point they're trying to do with the limited angel investment seed level funding they're trying to do, what they're trying to do next. Capital management, and what have they accomplished so far? With the funds they have raised, like 200K, 300K in the seed level fund, pre-seed level funding, what have they? Have they MVP? What have they done to validate the invention, right, and the market size? So this is critical. Capital management is critical. And the last thing we look for probably is how good is the deal. Let's say we pump in certain amount, angel level 500K into the amount. What do we get out of it? The ROI, expected ROI, expected equity out of the out of the deal. So we look at the overall picture, right? So how good is this deal? So we vet that by the equity we are getting, expected equity we're getting out of the deal, based on the fund injected, based on the growth potential, etc. How good is this deal in general? Over several factors to consider. So with that, I want to mention that these are the top 5 things we look for. All right. I want to summarize with saying that the first one is the scalable business model. Founder's track record is the second one. The third one is barriers to entry. The fourth perspective considered is capital management. And last but not least is how good is this deal in general. With that, I pass over to Anna, my partner, who will share with you what are the top 3 things they look out for, top 3 red flags to look for in a startup. Thank you.
Hi, my name's Anna Wang, and I'd like to thank Michael for that thought-provoking presentation. I'm also an angel investor and have been for the past several years. And today I'd like to go over the top 3 red flags to look out for. So the first red flag I'd like to talk about is lack of the MVP, minimum viable product. If they are using our funds to validate their idea, that's a red flag because they do not have a market yet for their product. And if it's just an idea on paper, then we view that as a red flag. The second red flag is founders' commitment. Are the founders committed to the venture? This is very important. Some inventors or entrepreneurs are hobbyists, and what we're looking for is a full-time commitment from the founder to make the growth of the company. The third red flag that we look out for is market size. Market size is an important factor because it determines the revenue growth potential. For a startup to reach certain inflection points, huge market size facilitates this growth at a faster rate. So in summary, I'd like to summarize the 3 red flags to look out for investors. The first red flag is if the company has a minimum viable product. The second one is, are the founders committed to a full-time commitment to their company? And the third one is market size. Thank you for joining us for our presentation. I hope you have a wonderful day. Thank you. Bye.
So let's move on to our next presenting company, Trident Coffee. Let's welcome Mr. Eric Johnson, the CEO of the company. Eric is a native of San Diego, and from a young age, he knew he wanted to serve in the military after seeing the example set by both grandparents. He obtained a mechanical engineering degree from the United States Naval Academy. Eric served as a civil engineer officer for 8 years in the United States Navy and deployed 4 times in 5 years to Israel, Afghanistan, and Iraq to support overseas operations. After transitioning from the Navy in 2016, he received his master's in business from the University of Southern California, which helped him navigate through the startup world. Now serving as the CEO of Trident Coffee, he is focused on creating connections with people over coffee and finding ways to impact the veteran community positively. Trident is America's finest cold brew, crafted in America's finest city. They are a health-conscious coffee company for people who live full steam ahead by creating connections, igniting ideas, chasing horizons, and sharing stories so they can be part of a tribe that reaches its full potential. All ahead, all together. They are sold nationwide at Sprouts and have 2 taproom locations and generating 4.8 million in lifetime revenue. Eric, the floor is yours, sir.
Thank you so much. I really appreciate that kind intro. Very excited to present Trident Coffee to everyone today, and we'll dive right into it. Next slide, please. So a big overview about the coffee market. Over 500 million cups are consumed daily in the United States. And what we wanted to do is operate kind of a very unique approach to coffee. We're from one of the beer meccas in the US in San Diego. So we wanted to kind of change it from a Starbucks model to what a craft brewery scene has provided for the ambiance. So we operate these really unique tasting rooms where they're basically like a craft brewery, but just for coffee instead of beer. And one thing we get associated with often is that we're the healthy version of Dunkin' Donuts. We offer our own keto baked goods as well as other gluten-free baked items with a really keen emphasis on health and wellness. So if people are going to drink coffee on a daily basis, we want to make sure it is the best product available to them with the quality, nutrition, flavor, and everything else needed to make sure they're living the healthiest life possible. Next slide. A little bit about, on the picture on the left is my grandfather, picture on the right is for me. And so saw this firsthand happen to my family. My grandfather had type 2 diabetes, ended up having a stroke and passing away from the complications. And my dad was going down that same route. Was diagnosed as a type 2 diabetic, and I wanted to step in and try to help him where I could. And so really trying to change his daily habits. We focused on his coffee, worked on his walking regimen, and changed up how he consumed his daily coffee. And we were able to get him back no longer in the type 2 diabetic range. His A1C levels are normal. And so he no longer has that concern about having to take insulin for the rest of his life, all by really just starting with kind of his daily habit of drinking coffee. So I've seen it firsthand, the importance of it, and know that it's possible for everyone to take advantage of. We just have to get away from the sugar, the high consumption of that specific in people's coffee, and really work with them. And it's been great to see how people are loving the cold brew, loving the health and wellness products. And it made me very happy knowing that I was able to help my dad firsthand and not have to worry about these health concerns down the line. Next slide. So I was able to serve overseas, really saw coffee had a huge impact on how people connected overseas, really starting with either coffee in Israel or chai tea in the Middle East. And it really was a community beverage, and saw that coming back here, it was more just transactional, just come in, get your Starbucks, go. Not very many people sitting down. And so that's what we loved about the craft beer scene was a connection point. It was a community location. People came to share with each other. And so kind of took that concept into Marshall School of Business and brought on a couple of fellow veterans as a founding team. And then we've grown this into a nationwide brand. Next slide. So a little bit about traction for us. We have 2 operating locations here in San Diego. Third is opening here in the next few months. We do have distribution nationwide at Sprouts and looking to add multiple SKUs there. And then we've got into all the great local Southern California health and grocery markets. So Erewhon, Jimbo's, Lazy Acres, Bristol Farms. We have a really good solid distribution network here in Southern California. And last year we generated 1.45 million. And then total for our total revenue about 4.2. And we're up about 40% this year, growing very well. looking to secure the seed round to continue the growth. Next slide. Market size, I think everyone's pretty familiar with how big of a coffee segment there is, but I really want to focus in on this cold brew segment that has grown at 27% a year. This is where we fit into play. We do have the retail component, we do have the specialty coffee component, but this cold brew segment is really growing very, very fast, and we have positioned ourselves on the front end of the wave to really secure it. Starbucks is selling about 70% of their beverages cold now. So there's a huge shift in demographics in terms of how people are consuming their daily coffee. And we've positioned ourselves very, very, very well to be on the front end of this by focusing on quality, consistency, and the craft component, where people can really taste the difference. And we get that all the time in our reviews from our storefronts, as well as our online presence and in stores as well. Next slide. So this is where we see with opening some additional tasting rooms here in San Diego. It's kind of an omni-channel approach where people can really enjoy the full experience coming into our tap rooms, very much how breweries grew over the past 10, 15 years. And so this is just some of our opening costs, our rate of return, cash to cash returns, and kind of the monthly payback for that expense to open these experiences here in San Diego. And then we want to go more regional over the next 3 to 5 years by opening in Orange County, Los Angeles, and kind of expand it, because we've really noticed that the regionality play is huge, because we have such a large demographic here in Southern California with an emphasis on health and wellness, and people are obviously drinking coffee very at a very high rate too as well. So really focus on that segment in that area, and growing other opportunities with distribution partners as well, with Sprouts, Whole Foods, and other natural channels. Next slide. So again, what kind of makes us special? We really focused on this health and wellness component, low sugar, keto friendly, gluten-free, organic. Those are all huge talking points that our younger consumers are becoming very aware of and are really looking for. So we really try to position ourselves in that to be the better for you kind of coffee that's out there. And so we just operated just like a brewery though. So people are loving coming in, getting our keto donuts, our gluten-free bagels, and then all the cold brew offerings that we have. Just to let everyone know, we do offer espresso at the tap rooms as well. We just really try to focus on the cold brew, but we do offer everything, so people are coming in and have the opportunity to partake in coffee that they want to. Then we slowly but surely are able to transition them over to some cold brew, especially when summer hits, the weather's warmer, and people have been very responsive to that. Next slide. A little bit about the team. We have 3 veterans on the team, Navy, Air Force, and Marine. Josh handles the business development and wholesale side of the house. So he was able to get us in the Sprouts Nationwide, deals with all the vendors, the distributors. Derek is our director of operations, who handles the day-to-day ops between the roasting, brewing, packaging, and then myself as the founder CEO, kind of handling everything kind of up and out for the business as well. Next slide. A little bit about the business model we have, kind of the go-to-market. We've already been operating with tasting rooms, wholesale, and direct-to-consumer, but really seeing the opportunities in retail coming around kind of post-pandemic. We grew during the pandemic because we were able to stay open and people needed a sense of normalcy. And so we really see if something like that happens in the future, we are still able to be able to operate, grow revenue, and be able to generate, but we also have the flexibility if something comes our way where we can pivot into the wholesale, pivot in the direct consumer. So we're not losing any revenue source if something happens. Again, we have that flexibility and adaptability, which is huge for us. Next slide. A little bit about the competition. There's some local plays here, but also nationwide brands in terms of everyone's familiar with Starbucks, Dutch Bros, Blue Bottle. There's been a lot of M&A activity going on here in the coffee space for the past 5 years. And so we really see the next 3 to 5 years as the opportunity to be acquired by a larger publicly traded coffee company that needs more of a regional health and wellness focus. And so that's where we've kind of been identifying and looking at potential suitors over the next several years. But we really hit all these great wickets that some of these other coffee companies don't. And so by providing that niche, we can really expand the market share for some of these companies and really kind of add value to them by adding also value to our customer base by being organic, veteran owned, and really work on this experiential side of coffee shops, which is huge. Starbucks has their reserve shops. And we really see that being very important for a lot of people to kind of come in and enjoy themselves and not focus on the transaction, but focus on the experience is what we do. Next slide. A little bit about our seed round. We are raising $2 million. We've secured already 30% of that. So we're looking to close out We are in talks with a few strategics right now to take a majority of the rest of the round, but we are raising to open additional tasting rooms, expand our distribution market footprint into Sprouts and then Whole Foods in the Southern California market, and get ourselves to the Series A in the next about 30 months. And so this is where we plan on using the funds to continue to grow into that strong regional player over the next 5 years. Next slide. And a little bit of the financial forecasting that we've gone through and hit, utilizing the seed round to continue expansion and growth, and then the Series A in the next few years to continue getting into the $12+ million in annual revenue. Next slide. That does it for the presentation. I really appreciate everyone's time. I know it's a long day of hearing all these pitches, but I'd love to chat with anybody who has further interest. Here's our contact information, and also iCFO has any of the information as well. Thank you so much.
Eric, thank you for that great presentation. I really enjoyed it. We do have some additional minutes that I'd like to share with you, and maybe you can kind of, if you want to focus on something that, regarding the presentation that you'd like to touch on.
Yeah, I think the biggest thing that's obviously very hard to show in a presentation is the craft aspect that we operate. A lot of the coffee companies that do ready-to-drink coffee are using co-packers, and there has been a huge log jam in them for the past year and a half. Some of the capabilities from the co-packers are being diminished. They're only really paying attention to the very, very large customers. And so for growth and expansion for some of them, it's going to be a bit of a challenge unless you're the Starbucks of the world. So for us, we really take this craft component to it. And we've seen the success of that in the craft beer industry over the past 20 years with a lot of M&A activity in the craft beer world. And so for us, maintaining that approach to being hands-on with the sourcing of the coffee, the roasting, the brewing, the packaging, it gives us a lot of flexibility and options to go. And we have everything dialed in where it's not a whole lot of capital expenditure to continue to grow and triple, double, 10x our production capacity. We've got a very good proprietary method that we use. It's very simple to scale, but we really take a really good approach to really paying attention to the quality of coffee we're using, the quality of water, and just the packing methodology too, to make sure we can expand and grow, but not overextend ourselves like some people have done using co-packers where they can't keep up and they go out of business. So we've really tried to focus on controlling what we control and providing the best quality product out there.
And I do have some information for our viewers. The conference is scheduled to end approximately around 4 p.m. There will be a networking session with entrepreneurs and investors using the virtual booths immediately after the last presentation. And for those who have any questions regarding the event, there will be a virtual booth, an information booth where you can assist at any moment. Additional to the virtual booth, we do have a virtual lounge that you have access to at any moment by clicking on lounge in the submenu. So now let's move on to our next presenter, which is Nutter. Welcome us is Alicia Long, the co-founder and CEO of the company. Alicia is a Chinese immigrant who graduated from the Ohio State University with a marketing degree and previously worked at Google, Amazon, and a number of tech startups. Nutter is a consumer tech company and creator of patent-pending Nutter Machine, a signature product that makes plant-based milk at the push of a button, along with Nutter Blends, leveraging consumer data regarding their lifestyle, dietary preferences, and goes through online personalization, quizzes, and proprietary algorithms, and then offering them tailored products via subscription. Alicia, the floor is yours.
Hi, I'm Alicia Long, co-founder and CEO of Nutter. Our mission is to change the way we milk. This is probably something that looks very familiar to you. If you drink almond milk or oat milk in a store, when you pick up a box, and on the back, it'll probably say a lot of these preservatives, additives, emulsifiers, gums, oils, and added sugar, make it not as healthy as advertised. And also it's not very sustainable because 17 billion of milk cartons actually will hit the landfills every single year because none of them are recyclable. And here's our solution, is all-in-one personalized plant-based milk at home in minutes. And this little machine can handle any type of plant-based milk, like almond milk, oat milk, soy milk, rice milk, you name it. And also we've launched delicious Nutter Blends. In just 20 months, we launched in July 2021, and we've done over $10 million in sales, primarily through D2C and as well as Amazon. Our year-over-year growth rate is 687%. How it works is that you go on our website, fill in a quiz, say if you drink almond milk or oat milk, you choose a base and choose another blend. However, whatever flavor you like, chocolate, vanilla, strawberry, etc. And then you fill it with water, select desired heat, and then after a couple of minutes, you have very delicious and clean plant-based milk. We launched our Nutter Blends subscription service in May of this year, and we teamed up with a number of nutritionists and dietitians and created this proprietary flavored blends. They're packed with vitamins, minerals, and adaptogens like ashwagandha, Rishi's ashwagandha. And they're all vegan, 100% whole foods, no added sugar. So here's the market size. The top-down total addressable market is $70 billion. In addition to global plant-based milk market, we're also playing in dietary supplements as well as dehydrated beverage powder space. Here's our expected growth. In 2021, we closed the year at close to $900,000 within 5 months. And last year, we did over $6.7 million in gross revenue. This year, we're aiming at $15 million top line. In the next 4 years, we're looking at top line growth at $300 million. Here's our milestone. In 2021, we launched our hero product, Nutter Machine. And last year, we finished our product R&D for our subscription Nutter Blends. And this year, we're launching Nutter Family Size, which can make up to 4 cups of plant-based milk, as well as a more powerful and faster version 2.0. And in 2024, we're looking to launch a Nutter commercial in Nutter Food Services across all of the coffee shops. In 2025, we're going to rinse and repeat in the global space. Now, I come from a tech space. I used to work at Google, Amazon, a number of tech startups, scaled a number of tech startups from 6 engineers to a couple of thousand people. So I understand the value of building a team as well as how to grow a enterprise value for a startup. And my co-founder, 16 years of mechanical engineering practice, and also is the king of process, and he is the COO of the company. We have 3 advisors. Ashin Parikh is the executive at PepsiCo, was part of the merger and acquisition at SodaStream, exited to PepsiCo for $2.7 billion. And Matthew Roberts is our advisor, 25 years at Nestle and Abbott, was head of the global product development for food and nutrition sectors. Ken Wilkes is the advisor as well as investor, former CEO at Instant Brands, scaled the brand to over $1 billion in annual revenue. Here's our investment. What we're looking for is $3 million bridge round, $25 million pre-money valuation cap. Primarily is to increase our marketing efficiency as well as increasing distribution points, get ready for Costco pipeline as well as Target. And also we'll spend some money on developing the commercial grade in for Nutter Food Services for all the hospitality, restaurants, and coffee shops as well. And thank you for listening. And my name is Alicia Long. You can find me at 8.long@thenutter.com. Thank you so much for listening.
Thank you, Alicia, for that great presentation. Alicia, we have a couple minutes left over. Anything that you may want to touch on specifically?
Other than I think this round is relatively quick compared to our last round. So the reason why we wanted to be able to complete the bridge round is because we're taking on Target as well as Costco as a bigger clients. So each of them is gonna contribute to a major pretty large pipeline of sales. So that's the reason why we wanted to extend our run rate. So this raise will be giving us 24 months of runway, and then be able to help us to scale this year.
Very good. Well, I think it's an excellent product, Alicia, and I think it's very well coordinated for right now, the time that we are. So I think it's being very well received by the consumer.
Yep. Yeah. So definitely, the timing is now. We're not in the market to to teach or to educate customers to drink oat milk. I think we're in the market to educate customers that there is a better and healthier way to drink plant-based milk. And the fact that Starbucks has making the move of switching the default milk option from whole milk to oat milk. So is Blue Bottle. So I think that is the indication of the market is pivoting. So we're definitely moving away from the dairy into more of a plant-based milk. So since the pandemic, there's a lot of consumers are very conscious about what they drink, what they eat, what they consume in their body. So we wanted to provide the transparency in the foods. So plant-based milk being a big part of people's diet, like a lot of people use it for coffee, for cereal, protein shake, for baking, for a lot of stuff. So as a global market, by 2030, it's going to be a $30 billion market. So it is definitely a big market. We're looking to be a market leader in this space.
Very good. Thank you, Alicia. Appreciate your time and your presentation. And we look forward to speaking with you at the virtual booths at the end of the presentations.
Sounds good. Thank you.
Thank you. Please don't forget to join us at the virtual booths at the end of the last presentation. And I do want to share some information before we move on to the next presenting company. To the investors, please visit each presenter's virtual booth for further discussion. The presenter will be able to answer any questions that you may have. After the last presentation, you can click on exhibitors, select the booth, click on connect, and meet with them live. And if anybody missed the presentation, at least the live presentation, there will be a video replay of the event. For those who were not able to view it live, you will have the opportunity to see it here at the auditorium. Our next presenting company, Everactive. Everactive's batteryless and wireless sensors generate a new class of continuous data streams, feeding analytic systems in the world's most innovative factories, leveraging technology spun out of research labs at the University of Michigan and the University of Virginia in 2012. The company has amassed a robust IP portfolio, enabling small form factor wireless devices to operate indefinitely from tiny amounts of harvested energy, currently monitoring more than 15,000 industrial assets. Everactive has consistently demonstrated quantifiable returns to a diversified customer base that spans the food and beverage, pharmaceuticals, consumer packaged goods, oil and gas, and facilities management sectors. Please welcome Bob Nunn. Mr. Nunn is the CEO of Everactive, a startup company building batteryless IoT solutions that unlock valuable new data streams using micro-renewable energy sources. Prior to Everactive, Bob was managing director at Intel Capital, focused on data center technologies. Having joined Intel in 2011 as part of their acquisition of Fulcrum Microsystems, where he served as CEO for 10 years. Bob is a graduate of UCLA School of Engineering and Harvard Business School. Please welcome Mr. Bob Nunn.
Hi, I'm pleased to have this opportunity to tell you about Everactive. I'm going to start with the investment opportunity and then give you a brief overview of the company. Now, we don't have a lot of time for this video, so I'd be happy to go into more detail later in a one-on-one session, or we can set up a follow-on meeting. First thing you should know about Everactive is we're a 10-year-old technology company, and we have a very deep IP portfolio, actually over 100 patents that we've developed to date. We also have products with proven market fit and an absolutely fantastic customer base. But because of the current funding environment, we've had to restructure the company as a Series A investment, and that's the investment opportunity we're going to talk about now. So Everactive is in the process of raising an $8 million convertible note with an 8% interest rate and a 3-year term. One of the best things about the note are the conversion terms that you can see listed there, and the fact that this money is senior to all prior investments. And that's important because to develop all the technology that I'm going to talk about, we've actually raised over $100 million today. So this new investment is senior to everything else that's come in before. We've already raised most of the money for this round. You can see some of the investors in our syndicate there. NEA is our lead investor, but with a great set of both technology and business partners that make up the round. But there is about $500,000 to $1 million of additional money available for investment, which is why I'm talking to you today. What are we going to do with the money? Well, the primary focus of the company today is to build a profitable entity. So we have a plan to get to cash flow break even by the end of next year, so over the next 18 months. And then at that point, we think we have options on how we move forward to either sell the company or exploit the opportunities to grow, continue to grow in the industrial monitoring space, or to use the technology in some other ways. But to talk about where we are today, the focus is on providing industrial monitoring solutions that don't require batteries. And that's really the technology that we've developed. Everactive was started 10 years ago by two professors that are world-renowned experts in low-power electronics, one from the University of Michigan and the other at the University of Virginia. They set out to create a semiconductor, a system on a chip, that's 1,000 times lower power than what could be done with other devices on the market today. And they achieved that. Actually, I joined the company about 6 years ago, and at that time we had our first version of the chip. We're now on our third, but that first version of the chip has demonstrated that. We continue to demonstrate that now as next improvement with each subsequent generation. But the chip's not enough. And what we've done is created solutions utilizing that chip, but building on top of that with system technologies, as well as networking technologies, and in the cloud, being able to take the data and provide artificial intelligence or data analytics to the data to create actionable insights for our customers based on some very specific targeted solutions. We've chosen pain points within the factory where we can provide, where a batteryless solution really provides a differentiated improvement over what's available to them today. We have a very differentiated set of benefits that we deliver our customers. By removing the battery, one of the key things is you get rid of battery maintenance, and you can start thinking about putting sensors in more places. So we're really putting them across the entire plant instead of on just your top priority assets. Also, one of the side benefits of getting rid of the battery is you get rid of the concept of trying to make that battery last as long as possible, managing the battery life, and you can take more data. So one of the things you'll find is not only can you put sensors in more places, but you get more data per sensor with a batteryless solution. So with this approach, we focused our technology on being highly scalable, what we call rest of plant scalability, so that you can put these everywhere, and to be cost effective. So the end result, we currently have two products in the market today. The first one was released in 2019, called Steam Trap Monitoring. Steam Trap is part of a steam distribution system. It's simply a valve that's used to remove condensate out of the steam pipelines. The steam traps have been around for about a century, and actually the technology for monitoring them has not really changed in that last century. Over 99% of the 50 million steam traps that are installed today are monitored manually by some poor guy that's got to go around and check them on a regular basis. In most cases, that's like once a year, once every other year. We find some customers that really haven't looked at them in the last 3 or 4 years. Our solution monitors the steam trap continuously, and as a result provides a very strong economic and sustainability benefit to the customer. Now, this product, since it was our first product, represents about 85% of our revenue in 2023. But our next product is actually growing very quickly, and we think over the next 2 or 3 years will be equally distributed with steam trap monitoring in terms of deployments with our customers. You may have seen other companies that are focused on machine health monitoring. It's actually quite a popular topic, and there are a number of companies in the market today. Everactive is the only one that does it without batteries. We actually use indoor light to power the sensors. But the biggest thing that we provide is a ton of data compared to the battery-powered competitors. And then actually, if you've seen other companies in the space, they probably most likely talked about their analytics and how they can bring new insights to very unsophisticated customers, telling them what's going on with their machines. And we're a little different. We're focused on very sophisticated customers that have their own data analytics capability, don't want to hear from some other vendor as to how to do that. But what they do want is more data from more places and richer data streams. Today, Everactive has 41 customers, which doesn't seem like a whole lot. But as you can see down below on the slide on the right, we have some great customers. So our top 5 customers there on the left, and then 5 customers that we've brought on over the last year that will represent our, between the 2 groups, our top 10 as we go into 2023 and 2024. We not only have business at one factory with these customers, but in the case of the top 5, we're in multiple factories. I think Anheuser-Busch, AB InBev there is the #1 with about 18 factories, breweries that are using our 16500. 3M is actually our largest customer today, across 9 facilities, but ExxonMobil represents a TAM that's probably 3 to 4 times that of what we see with 3M. So we have about 15,000 sensors deployed today, and we're taking over 25 million data points every day. Last thing I'll talk about, and then again we can go into more details later, is the revenue projection. You can see there's a fairly high growth rate for the company back in 2020, 2021, 2022, and that has leveled off in 2023, really due to those strategic decisions that I talked about, some of the strategic decisions made last year that were reversed, and the new focus back on this business this year. We do see a clear path, primarily through expansions with these current customers. And again, we've listed out the top 10 there and show you that 70%, 80% of the revenue will be coming from those customers as we expand. We have very great relationships with those customers where we're talking about the opportunities and what's next for Everactive technology rolling out now, not only in North America, but also in the European community. I included the forward-looking statements and confidentiality waivers. I'm sure you've seen this a million times, so I'm just going to end my time with a recap of the investment opportunity. Investment to invest up to $1 million, but we'll can talk about minimum size investment if that's something that's interesting to you, with great conversion terms for a convertible note at 2.5x liquidation conversion if we sell the company before the next financing, and then a 20% discount into the next financing, but capped at a 25 million pre-money valuation. So, and as you see from what I just described, we think that the company will be worth a lot more than that in the next couple of years. Last thing before I go is that we are on a short timeline. As I mentioned, we're in the middle of this financing. We have a final closing that's been established for July 14th. So that's only about 3 weeks away. I know that's not a lot of time. I will say that we are a sophisticated company. We have a data room already set up, and we can move very quickly if you're interested and would like to work with us. We can get you the data you need and answer any questions that you have in a very efficient manner. So we hope we can generate some interest and that we can talk later. Thank you very much for your time. I really appreciate it.